it's pretty scary when you think about all of those moving parts. It kind of gives us a bit of a gloomy look at the prospects here in Canada. But I think the really positive news, if there is a silver lining, is I believe that there are certain asset managers, Centurion being one of them, that's done an awesome job at trying to position those of us who are investors in a positive way. Can you talk to me about how is it that you believe Centurion is kind of meeting some of those challenges?
Okay, so I think there's a couple of ways. And the first, I think in an investment thesis, I've been managing money now for almost 35 years. So one of my strategies, as much as I've been a trader, my style of investment has always been to get behind stories I have fundamental beliefs in, right? So I'm not the kind that's just like, well, number goes up, so I'm going to buy because everyone else is buying, and that's a trading strategy all on its own. And there's plenty of people who have made a lot of money doing that. My fundamental strategy is, which way is the wind blowing? That's going to blow for a consistent period of time, have real conviction about it, and then get behind that idea. So Canada clearly has a need for housing that's not going to go away. There is nothing, and this is an entire whole conversation, there is nothing that can or will be done that will remove all the impediments to restore this, supply-demand imbalance. Like, everything is good, but, I use this analogy of a car. And car's got four wheels, got an engine, steering wheel, brakes, and accelerator, like all these other little parts. But if you're missing one of them, your car's not going to go. So we can talk about, well, interest rates are too high, construction costs are too high, entitlements take too long. So let's say we fix one of those, doesn't work, right? Even if they removed, like the government gave us the land for free, we don't have enough labor in the country to build the capacity that's required. So anyway, the reason I go down that explanation is to say, I think you get behind a good idea, and I think supplying housing to Canadians is a good idea for a whole bunch of reasons. But as an investment thesis, I think it's a solid one. The second thing is that I do believe that we're in a period of time where housing affordability is going to be a real challenge to buy, and that rental is certainly resurgent and will continue to surge. So I think that that's actually a positive for us as well. We've shown that you can outperform. Real estate in many ways is a leverage bet on inflation, right? Because you get to borrow long-term money, and we have leases that, essentially people come and go, but you get a chance to reset your rent. So, we're, I wouldn't say immune to inflation, but inflation tends to be a tailwind and not a headwind to our business. And I think if we're talking about a macro environment, which everything except one thing points to an inflationary decade ahead, the only thing that gives me pause on how much inflation there's going to be is this whole idea of AGI, right, or AI. So, and could that cause deflation? I spent tons of time on these like random walk through theory, but could that result in a whole bunch of people losing their jobs, which means we have disinflation? It's possible, but if you look at what they did during COVID, they print the money to make that up. So that's ultimately inflationary. So even, like, no one knows exactly the future. But I think it's great if you can be in an investment product like ours that has, the right macro thesis, but also benefits from those pro-cyclical inflation story.
Well, correct me if I'm wrong, like in kind of layman's terms, Greg, I think like in real time on any given year, one is buying, when they buy into Centurion, essentially a proportionate chunk of their fair share of the rental income off of the assets. So they're buying into a cash flowing asset. It's not a theory. It's not, kind of off theoretical. People can drive up to these buildings, look at them, feel the bricks and mortar, and they're participating on that cash rental yield. And then, but also, when we capitalize on the fact that this asset is going to essentially go up in value over an extended period of time, I think even if we're quote unquote in check on inflation, these assets, even if, real estate in theory is growing at 2 to 3% every single year, these assets are going to grow with it. And so we're not only participating on the cash flow, but we're also participating in that hard asset. So now if we're in a hyperinflationary period, or even,
well, I'm not saying hyperinflationary, but a period of higher than normal inflation.
Fair. Sorry, I injected a wrong word in there. My apologies. But in essence, like, we've got something that's going to kind of be a stabilizer in one's portfolio. Is that is that my understanding of what you've just shared with us?
I think that is right. I mean, one of the core things I talk about in this business is, and it really became, like, I have talked about this for 2 decades now, but one of the things that people really only understood came during COVID, when we talked about, because a lot of people thought, when they talk about real estate, they think that, oh, real estate is, there's one real estate market. And I said, there's no such thing as a homogenous real estate market, in a similar way that there's a homogenous stock market.
Right.
There's everyone needs a place to live. That demand has, that doesn't change, right? Everyone needs a place to live, but no one necessarily needs your office building, right? And no one necessarily needs your resort or your industrial building or your retail plaza. So I think, fundamentally, we're a product that I think has less economic volatility and variability than a lot of other businesses.
It sounds boring, Greg.
I think boring is good. I don't say I have a boring job, but to the extent that it's possible, I like investors to think that we're boring.
Fair. And you know what? If you look at the trend of how you guys have performed over the years, steady as she goes. I always say to people, as it relates to your investment or inside Centurion or even some similar asset managers, if you're looking for high octane returns, this is not the place to look for it. If you're looking for steady as she goes, kind of dependable year over year returns, obviously I'm not making individual suitability statements, but rather comments on Centurion in general. It's a great place to invest.
Yeah, I mean, we've had some exceptional years, where we've posted 20%, and I think a lot of people would be very happy with those type of numbers. But I've never promised that, right? I've always said, look, 7 to 12. Sometimes we're going to outperform that. Historically, we have. Our 15-year track record on this fund is north of that range.
Right.
All I can say is we try to be conservative, try to, without taking a lot of undue risk, achieve that and hopefully do better. I think all the keys are there for us to do that in the future.